Okay, so I'm starting our today's session now. So here, okay, this was the previous situation here and strong uptrend situation. And then market created two bearish candlestick here. And then there was a round number level. And what happened? Red, green. Okay. So POC area. POC area here. Retracement candlestick volume high at round number, stop bar, next candlestick reverse following the trend. Okay, so basically it's a 70, I think 70, and exactly here. Okay, this is a I think it's a high round number level. A stop bar. No, I think it's not a stop bar. It's a break bar. Stop bar will little below from here to here. Okay, when it's when break bar in the uptrend market condition, break bar of any bearish candlestick, so more possibility it will reverse. But we must follow, is there any gap here or not? If there is a gap, we have to just place our trade below the level. That's it. Okay, there, although there is no gap here, so now we can trade here to the upward direction. So and suppose this candlestick close here, and then what happened? Next candlestick start opening from which area, we must follow this. Okay, sometimes what happen, if this situation is like this type of, suppose there is a seller's entry point area here, exactly at that area, and from that area sellers entering, it's a strong body candlestick here, again a strong body candlestick here, and this candlestick close above the level, it's also okay. But when this candlestick start opening, it's little jump down, came here, and then now it got rejected like this. So that time this previous level, this above level, round number level, will act as a resistance level. And after this because of this is break bar, okay, you must follow which bar, this one. So you must carefully observe the volume POC is in which area, at the wicks, at the exactly closing point, or little above, little below. Where if it's exactly at that area wicks, that is definitely stop bar. So more that time there is no possibility to jump down, this candlestick jump down. Okay, but if break bar, in this case, sometimes what happened, market little jump down, it got rejected like this, and finally market may fall down also. So you must carefully observe this situation, okay, in the case of break bar. Okay. Okay, one candle retracement psychology. Okay. So this one, and then this one, second one. Okay. What the second one? This one, I think it's looking like a doji here. This one, okay, okay. So in this candle, 85, yes, 85, and if it's a bullish candlestick, definitely it's a stop bar. Okay, and when next candlestick start forming, so we have to just place our trade exactly from the POC to the downward direction. So after breakout, retracement candlestick. Okay, after breakout, retracement candle creates POC at the stop bar, next candle reverse following the psychological pattern. of one candle retracement. Yes. So basically, when market create that type of situation, you must follow first of all this candlestick size. Okay. So this candlestick size is a very weak size by the buyer side. Now, where is the POC? If the POC is little above from the body part at the wicks, so definitely it's a stop bar. So when the bullish candlestick is stop bar in the downtrend market, it's very easy to analyze next candle down. So we can easily analyze this after observing this data from the market. So it's a very easy way to confirm that yes, what is happening insidely in this candle. Okay, yes, you are right here. Okay, what happened exactly here? Psychological pattern of the single retracement candlestick with POC at the push bar of the red candle. Okay. In this candle, okay, this one, yes. Then this candlestick exactly volume high. It's a stop bar. If there is any sellers entry point area, stop bar, more possibilities sellers may enter. Okay, now sellers enter. Now this POC is exactly at the weak point. That means it's a push bar. So when it's a push bar, then we can expect next candlestick up from this area. So we can just place order below that level to the upward direction. And here, this one, first of all, this one, stop bar by the seller side here. Oh, sorry, this is the push bar, not the stop bar. This one.
Yes, push bar.
By the seller side, push bar. So not
Yes.
stop bar. Okay, when it's a push bar by the seller side, yes, POC at a push bar of red candle. Yes, exactly. It's a push bar. So when it's a push bar, now we have to follow the trend. Market is uptrend. So it's a push bar and volume increase here by the buyer side. Now I don't understanding what's the amount here. I don't know. It's the 23 or 32 or
It's
40,
88 something.
88. This one.
Yes.
If it's 88, it's not perfectly visible here. It's if it's a 88, definitely you have to check this area. Okay.
Yes.
Don't trade immediately here because of this volume. If it's 88 and that is a level, so more possibility market may fall down. Okay. But
Okay.
if it's 88, but there is no seller's entry point area and it's a strong uptrend market, so these sellers will fail. It will not control the market to the seller side, to the downward direction. Market will goes up. But if there is a level, don't take. But this type of situation is a very perfect situation in uptrend market. If this volume is high, exactly at the weeks or opening price, so that's the stop bar. So after stop bar, market will continue in the uptrend market condition. Okay.
Yes.
So try to follow this point. Which point the volume is increasing? That is very important. Okay, here a strong momentum, and then this is a support level, and from the support level, buyer center. Okay, from the support level, buyer center, and volume is high here. Okay, by the seller side, seller's volume high here. Okay,
Yes.
when seller's volume high here, it's easy. There is the upper rejection also, pressure from the both sides. There is a lower rejection, upper rejection, but it's a trend, downtrend, and a strong movement by the seller side. So sellers will stronger, sellers much stronger. How we know? We can easily understand by this volume, by this red volume. This volume is strong
Yes.
by the seller side, exactly at the bullish candlestick. So next candlestick down. Yes, you were right. Okay. So today we will learn about the candlestick psychology, or basically when single candlestick pattern, basically. Okay. So what we learn about
Yes.
single candlestick pattern? So single candlestick pattern, basically we have to observe in the market, in the uptrend market situation. This one, this one with upper rejection, this one with lower rejection also, spinning top, Marugozu type candlestick with both side little rejection, and only this type of candlestick, or sometimes we will get this size also, this one little upper rejection, and this type of rejection. So all these are the by the buyer side, and seller side, same thing. Hammer, hammer with upper rejection, inverted hammer, inverted hammer with lower rejection. So in the downtrend market, these all are the single candlestick or important candlestick. Okay. So we already know which type of market condition we must take for applying this type of candlesticks. So we always try to follow a momentum or any trendy situation. Suppose this is the basement of the market. So when this basement of the market, so after basement, we will follow two things. One is it's a direct momentum, or another is it's an uptrend market. So uptrend market, that means market must follow the sequence. So what's the sequence? Sequence is this one, the sequence. Low high, higher low, and higher high. Low, high, higher low, higher high, higher low, higher high. So this is the sequence, or direct momentum. Okay. Same thing here also. From any basement or from any trend reversal setup, from any extreme sellers entry point area. So market will create direct momentum, or market will create like this type of downtrend market structure. So sequence is high low, lower high, and lower low. Okay. This is the sequence. High, low, lower high, lower low, lower high, lower low. Okay. So in this type of market condition, if we get any momentum, so we have to take minimum 4 candlestick, more than 3 candlesticks in a row. Then only a momentum confirm, we can confirm that yes, market is now very stronger by the buyer side. But there are some other conditions of the market also. So what's the other condition? Other condition is that when we get this type of movement, so the total market structure is a sideways, or previously it was a good market, it was a good trendy downtrend market, and after that market hit that extreme buyer's entry point area. So that situation we must confirm that when we see after a long fall, when market hit any extreme buyer's entry point area, and previously left side of the market is a good market. Now market came here, it again trying to create a ranging system or a trend reversal setup chart pattern, and then the market is going up. So that is a very perfect market we can take. But if the total market condition, that means sideways like this, sometimes goes up, again down, again goes up. So in between this area, already there was a momentum, previous momentum, but that momentum will already failed. That momentum already failed. It reversed back to this support point, again goes up. That's why there is no value of this type of momentum right now here, because of the sideways situation, because already previously a 2-3 momentum already failed. It already reversed back. That's why we will not trust that it will continue the market to the same direction. But if we get the previous market left side was a very good market condition, trendy situation, and market came back to an extreme buyer's entry point area, market created here a 10 reversal setup. After that, it's the momentum. Now in between this momentum, we have to search this type of candlestick, this type of hammer, inverted hammer, spinning top, and this type of candlestick or this type of candlestick that has only lower rejection like this type. Think that it's this one, this candlestick here, this one. So in delta reverse, which point we have to, our focus point? Definitely our focus point, previous candlestick POC first. This candlestick POC. If this candlestick POC is here, and that is a good amount, that means the 75 or 80 or like that, something like that. And this candlestick got rejected from this POC, and this candlestick exactly close above the rejection point, or if there is any level, that level breakout happen, after that market create this candlestick, and it after breakout it close above the level. So that point we must follow. And now this candlestick volume, this candlestick POC exactly at the wicks part or opening part. So when market create that type of situation, that is a very, very perfect situation. Or we will not get each and every time level. There is no level here, nothing. So we have to observe these two candlestick POC as well as this candlestick got rejected from that POC or not. and then
Yes.
level, previous level of the market. If there is any level, we don't have any opportunity. But if there is a level, but the level breakout happen and this candlestick already closed above the level, that is perfect. And now POC in this candlestick POC is exactly at the opening price or exactly at the wicks. So we can trust this candlestick. So it will continue the market to the upward direction. Okay, so what I was talking about the situation here, that is the when any
Yes.
momentum situation, when we get this type of situation, that is now we can add all other concepts. Everything will give us yes confirmation. It's a momentum, it's a single candlestick pattern, so there is no level, next candle up. And if we see,
And is it, I want to ask one question.
yes,
In a good trendy market, is it possible to trade on each and every candle on the basis of POC?
yes, there is a system. You must
Okay.
understand the momentum starting point.
Okay.
Momentum starting point. So where is the momentum starting point? If you come to know that yes, this is the
Climax.
perfect point, it's a momentum starting point. Momentum, that means after momentum, it will continue at least 4 candlesticks to the same direction.
Yes. We can
So
also judge from climax candle, no? Climax start candle.
yes, climax start candle, we have to take so many confirmation. If you want to trade 3 to 4 candlestick in a row, definitely you have to take more than 10 confirmations from the market. Otherwise, it's risky. Okay.
Yes.
So we
Yes.
are trader, we are not gambler. Always remember this thing. Okay.
Yes.
It's just like a gambling.
I just
I
wanted to ask that POC is a very important point in this Delta River.
Yes, exactly. That will act as a support and resistance. If you observe in the market, you will get each and every data that from which point it just got rejecting. And although is there any, suppose there is after this candlestick there is any bearish candlestick, but it will not create like this type of bearish candlestick in this type of market condition. Definitely, it will give you this type of rejection, but you placed your trade exactly at the POC. That's why it will give you winning. Okay. So
Yes.
it will give you must win here. Why? Because of the POC. POC will save
Yes.
you. You have to just take margin of safety. You are right.
Yes.
You are always right, because when you see the POC is exactly from which point POC. If you see the POC is the bottom point here, exactly opening price or at the wicks in this candlestick. Okay, POC is here. After that, this candlestick again reverse back, got rejected from here. You have to think that when market came here, you just place your trade here to the upward direction, because of the already you have taken so many confirmations. That is the trend reversal setup, that is the previously it was downtrend market, there was a selling climax int, and then there is a chart pattern here. This area is a very strong area by the buyer side, and you got already a chart pattern, and a neckline breakout happened very strongly by within 2 candlestick or 3 candlestick, and there is a momentum. And there is also, you have taken a confirmation, this is the accumulation area, and all the bullish candlestick volume high, and also you already got a buying climax start candlestick here. So after that, this is a momentum. Now you can start from a momentum starting point, you can start your trading.
Yes.
The direction of the trend based on POC only. So momentum will start and it will go up more than 3 candlesticks in a row, 4, 5, 6 candlesticks in a row. And if you can take perfect area exactly from the POC point, definitely it will give you winning. Either it's a bullish candlestick, either it's a bearish candlestick. It's not a big issue. If bearish candlestick, that time also you will win because of POC. That is very important part. Okay.
Yes.
POC, that means is a SNR. So when you see this type of situation, so now market will continue here to the upward. So now try to understand oppositely. Okay. So now this candlestick volume is high, exactly from here to here, and there's a red volume. So
Okay.
now, is it possible for you to continue here to the upward direction?
So we'll have to confirm from the level if there is a
Yes,
level.
exactly. We must check the level. Why this type of situation happening here? If we see this type of situation happening because of any level, definitely avoid. Even little above. Suppose the level little above, like this here, like this position. Definitely avoid.
Suppose if there is no level, then we should go for a trade or we should avoid it.
Although there is a suppose there is a, I will give you an example in the market also. Suppose this volume is high here, exactly here. Either it's a red volume or green volume. It's not a big issue, but volume is high. That means it's a stop bar by the buyer side. Okay.
Yes.
Try to avoid, because
Okay.
there is a reason here why this happening. Although it's a pressure from the buyer side, so but volume is high exactly at the last point here. Why? Maybe market may reverse, or maybe it will create a doji type candlestick, or sometimes market may goes up also, but it's not any perfect setup.
Even if it is from the buyer side.
Yes, even if it is from the buyer side also, but in the buyer side most of the time you will get the next candle up, but you have to
Okay.
take confirmation. If you
Yes.
have taken confirmation that there is a level, that level breakout happen, definitely you can take below the level to the upward direction. Okay.
Yes.
So when market create that type of situation, so all these candlesticks are clear or not? This one, everything same,
Yes.
same setup. Everything is same. So now try to understand this one. Okay, this candlestick. So this candlestick is a strong candlestick. Some people called it's a momentum candle. There is no upper rejection. This is the lower rejection. So if this type of situation happen in the market, there is no upper rejection, and if this volume is high exactly at that point, here to here, next candlestick up, if there is no level. Okay.
Okay. Okay.
Now market reversed back. After this candlestick, market reversed back like this, like this type of candlestick. Okay, any types of candlestick. Just your first observation, this candlestick or any bearish candlestick here market created, last candlestick is a stop bar or not, this one. So if you see, this is any types of this type of weak candlestick, a hammer, inverted hammer, spinning top, any types of candlestick exactly here, and the volume is high exactly here at that point, that means it's a stop bar. Stop bar, that means it's a very perfect situation here for reversal. Now if you see the stop bar, and as well as there is a level, it may by trend line or it may by horizontal line, that is a very perfect one. So now you can take here a trade to the upward direction. Now you have taken a trade here to the upward direction, and you got a candlestick that is the Marubozu or Marubozu type candlestick. Okay. This one, even this one, these two here. So now this candlestick volume is exactly, suppose this candlestick exactly close here at the resistance level and volume is high here, don't trade. But if you see this candlestick volume high, exactly POC is below here, it's a push bar or pushing in direction. Okay, go to the upward direction. Next,
if it is at the breakout bar,
a break bar is little confusing because of this level.
Okay.
If there is no level, then it's okay. Break bar is also okay. So market will continue. But if there is a level, try to avoid.
Okay. We
So
should
try,
consider only push and push in direction.
yes, two setup, push bar
Yes.
and pushing in direction. So definitely it will give us winning, because for this type of market condition, market will go up. So all these are also completed. So now in the downtrend market, this also completed. So at the pullback area, you have to observe this type of candlestick, like this one.
Yes.
Okay. In the downtrend market, in the pullback area, when pullback area, at that area, exactly at that area. So if you get this one, so even any types of candlestick, you must observe a stop bar or not by the buyer side.
Okay.
And always you have to draw SNR level. All others situation of the market same. You have to take maximum. If you want to take maximum confirmation, you have to draw a resistance level only, SNR level, and all the levels of the market, even SNR level by horizontal line. If you get that type of situation and exactly mark this, any of these kind of bullish candlestick volume is high, that is the last point of the candle, a stop bar. So now you can trade here to the direction of the trend.
Yes.
And when the next candlestick create like this type of candlestick, any of this type of candlestick, that Marubozu type candlestick or momentum type candlestick, or only upper rejection, and the push bar and pushing in direction, market will continue. When all the market condition is a strong trendy market, definitely we have to apply, it may uptrend or it may downtrend, we have to apply the rules is based on the POC. POC is very important. When POC, we will get the POC in the downtrend market, POC is high, and any of this type of candlestick, POC high, and it's a push bar and pushing in direction, we will continue to the same direction. But suddenly market create this type of candlestick here, again market create this type of candlestick here, but this area volume is high. Definitely we have to find out the reason why it happening. Okay, if you see there is a level, definitely we have to avoid. Okay, now try to understand in the chart. Is it visible?
Yes.
Okay. Okay, so try to understand here. See, this candlestick, so it's a strong market condition, it's an uptrend trendy market, strong market condition. So now this candlestick, after this pullback, see this candlestick, hammer candle. So hammer candle volume is high exactly at the wicks, and which volume? This one, buyer's volume. So next up. So now see, this is looking like a hammer type, not hammer, basically it's a Marubozu type candlestick with lower rejection, also little upper rejection also. So but volume is high where? See, exactly at the closing point. So when closing point, definitely we have to find out the situation. So see, next candlestick is a doji type candlestick, so don't trade in this type of condition. Okay, so now I'm showing you some more examples. Okay. Okay, so it's a trendy market. So it's a trendy market. Okay, if we start from here, it's a trendy market. So when we see this type of trendy market situation, see this candlestick exactly close at the POC, above the POC point. POC, it got rejected from here, but close below the POC point. Okay, so if you want to place your trade here, it's looking like a inverted hammer candle, so you can place your trade here exactly from this point to the downward direction. Now it's a break bar. Okay, it's a break bar. So when it's a break bar, so definitely you have to find out the support area. If you see any support area, don't trade. Okay, now see, first time it's failed, market fall down. But second time, what happened? This see, try to understand. This is not a red volume, although it's a push bar. Volume is high, buyer side. Next candle.
Yes.
So now see here, this candlestick, now it's a push bar exactly at the opening price. Volume is high. So, and this candlestick got rejected and got rejected from POC point and close below the start below the POC point. From this POC point exactly start and fall down. So now see this candlestick. This candlestick exactly got rejected from here. It not cross above. That means these sellers didn't allow the buyers to go up. Market fall down. Okay.
Because it is a pure push bar.
Yes, it's a push bar and volume is high exactly at the closing price. So by this way, you have to analyze all the situations of the market. So based on trendy market situation, you have to complete your assignment by all the important candlestick pattern: hammer, inverted hammer, spinning top, and
yes,
all the Marubozu type candlestick and momentum type candlestick. Okay. So this is all about today's session. Thanks for joining today's session. Now I'm going to close today's session here.